Good afternoon and welcome to the SUPERDRY PLC interim results Q&A session. Throughout this recorded session, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll.
That's great. Thank you very much indeed, Ali, and welcome to all the investors on today's call who have joined us for the SUPERDRY Q&A session. My name is Mark Downs and I'm the CEO of Investor Meet Company, and I certainly look forward to sharing the next 30 or 40 minutes or so listening to the SUPERDRY story. I guess there's no better people to share that story with us other than the management team, and I'm delighted to welcome today Julian Dunkerton, CEO, and Sean Willis, CFO, to the Investor Meet Company platform. That's a good start. Good afternoon to you both.
Hi. Hi there.
Well, look, let me firstly start off by thanking you so much for setting aside time today and enabling investors, individual investors, regional investment managers, the opportunity to be part of what I know is a very full roadshow, this being your first day as well. So thank you once again on behalf of everybody for your time today. So let's just crack on. And I guess, Julian, perhaps I can start with you. Obviously, we've got investors on today's call that know you really well, and there'll be perhaps others that know you less well. So perhaps, I don't know, let's just start off by maybe just giving us an overview, the journey, the background leading up to today.
Well, for those who don't know me, this is something that I've done all my life. I was very fortunate. I found out what I was good at 19, started a business and grew it every year for 30 years. I don't think I ever had one year where I went backwards. So every year growth, and which is quite an interesting journey in the what we call the fashion industry, because not many people have done that. So I'm a bit of an oddball in that I've been able to sort of emotionally calculate where the market would go and where fashion would go. So fashion has gone through many incarnations in my lifetime, and I've somehow always managed to be on top of them all. So I went public in 2010 and carried on growing up until I decided to take a sideways step in 2015/16, I think it was. And that was because I really didn't want to do the next phase of our journey, which was physically go to China and physically go to America, because that would have taken me away from my family. So I made a difficult choice to move sideways and bring in somebody else to take it on that next stage of the journey. Unfortunately, that didn't work out too well, and the management team took the business model and fundamentally changed it. So much so that I left the company in 2017, I think it was, and then really watched my creation being hurt from a distance, up to a point where I could only put up with it for so long, and fought my way back in to regain control and put it back on a solid footing. So 2019 came back into the business, changed the exec to a more forward-looking exec, so we've had a proper restructure internally. We have a very strong team that is now looking forwards, and most importantly, we have restructured the business model back to where we know we can succeed. So a full price model that is a brand that retails as opposed to a retailer. So there was a sort of a belief in my absence that we were a retailer, and therefore it was a very discount-led model, and really not a forward-looking product model, which is what we have to be as a business. So roll on a couple of years of pandemic, and where are we? We're actually in a fantastic position, we all feel. We have a restructured design team that is now has an ability to design on an ongoing basis, so therefore create the future and view the future. The product quality has improved at untold levels since rejoining. And this autumn was a real expression of that product journey and where we've come and where we're going. So if we take jackets, one of our biggest focuses, because it's such a huge category for us, and we are really considered a market leader within the jackets category, we've increased our sales 40% this autumn. So a huge progression, if you like, based on the fact that we identified trends that had been missed and put them into the range and made sure that we had them. And of course, lo and behold, the public love it. So, bit by bit, we are going through the range and improving it category by category by category. So I'm now working on graphics and dresses, and we will work our way through the ranges and make sure that we are world class. On top of that, of course, engaging through social is incredibly important. So another aspect of what hadn't been happening is we weren't communicating to our customer base through the channels that they want to be communicated to or through. So obviously influencers a key part of life now and a key part of the future. So we've gone from 200 to 2,000 in a year. We've increased our Instagram followers. We've introduced TikTok as a platform, put 100,000 followers on within a few months. And we're really starting to talk to our consumers as they want to be communicated to. Then, of course, we want to lead through sustainability. So sustainability is fundamental to me as a human being. And I'm pretty certain that from now on it'll be the number one question that every investor asks when they're about to invest their money. Is this a company for whom has a strong ethics or strong sustainable background? What is their carbon footprint? Where are they going? What are they doing to the world? Well, we want to be the number one sustainable style destination. And what does that mean? We want to be the listed number one sustainable clothing brand. We've made huge progress already. You probably saw that our CDP rating has gone up three years on the trot. We're now an A-. We are converting 20,000 farmers in India to become organic. If one goes into Oxford Street, you will start to see the messaging start to resonate out there. 50% this autumn of our product range is going to be with a sustainable background, be it recycled bottles, 43 million plastic bottles in our autumn jackets range, and so on and so forth. So we are really pushing forward. Oxford Street, a sort of statement of intent of what the future is. That combination of influencers, a beautiful restatement of the brand and the journey of the brand. So a true expression of who we are as a brand. So physically going through and making the journey easier through demographic product choices, making it very easy to navigate, and really quite exciting, introducing vintage products to the store mix, and an ability to communicate our sustainability messages and a broad demographic. I think, as I left the company, or while I left the company, the product mix became very, I'd say a lot repetitive is the word I'm looking for, and we've actually really split it out. We've introduced this short order design process, which allows the whole product range to advance very quickly. So it's a test model. We identify areas we want to test, we test them, and then they move into the the full price range or the main range. So we're in an exciting place. We are renegotiating all our rents and bringing physical retail into a sort of making sure that every store is profitable. We have a microservices platform online on our website, which is launching in the next couple of months. So you will really start to see huge progress online and the customer journey from May onwards. Social is up and running and growing. So on every level, we really feel we are progressing in leaps and bounds. But you know, it's the last 11 weeks you want to look at and to really feel that progress. So you look at the numbers of the last 11 weeks, we've moved away from a sale business to a full price, proper branded business that we can all be proud of. So I think that's my introduction, really.
Yeah, that's absolutely brilliant. Thank you so much. And look, what I thought I'd do, I mean, you referenced the new flagship store. You very kindly gave us a video. So what I propose to do, if I may, is just give the attendees on the call just a quick snapshot, I guess, of that new branding. So let's just bring that up for them. Well, there you go. What more can I say? Well, look,
The influence area. So there's more.
There's more to come. Well, look, Gino, I guess the title of today's webinar was live Q&A. So I think that's probably the key here. So let's dig into some things. Now, obviously, investors did have the ability to pre-submit questions, and thank you to all of those that took the time to submit questions ahead of today's event. So let's dig straight into it. Let's try the first question here, which is, please, can you talk about your marketing strategy? What are you doing to address brand perception and boost sales, a bit like the Neymar collaboration and influencers? I know you have touched on it, but maybe you could expand a little if that's possible.
Well, so influencers are a key part of our strategy. So, you know, they are tiered by the sort of levels that they're at, but creating an army of influencers is key to our whole marketing strategy, to be perfectly honest. You won't see big billboards of us. You won't see cinema adverts. It's a digital strategy. So it's very much digital and using social channels to, you know, and with TikTok being a major grower in that whole kind of world. So, you know, you use each platform to talk to different age groups and different demographics. So yeah, that really is in essence how we are creating awareness and demand.
This question we received, and apologies if I'm reading these out, but it's exactly how they come. So I think word for word is best that I can do. Yeah. So could you please talk to us about the SUPERDRY supply chain and its resilience? Could you also talk to us specifically about what steps are undertaken for suppliers, for Chinese suppliers, that cotton is sourced ethically and sustainably, and no forced labour is used in the production of SUPERDRY's products?
Yeah, so almost all our cotton products come from India and Turkey. So it's far, you know, Chinese cotton is not a major issue for us as a brand. So, I mean, and you'll notice that we are very much moving to organic. So, and we have no ability or no plans at the moment to convert production in China, because it's all about India and then next Turkey in terms of our organic kind of process. So that isn't really an issue for us. From a supply chain point of view, we are pretty stable with our supply chain. You know, we work on long-term relationships because we need to bring our factories along on the journey with us, on the sustainable journey with us. So that's a key part. You know, are they using renewable energy? You know, what are their working conditions? Are they paying? Are they looking after their workers correctly? All of these, you know, factors are incredibly important to us, which means that you have to have a constant supply chain, if you like. So that's key to us.
Investors on the call that just to submit your questions for the live meeting, just simply type in your questions in that Q&A tab on the top right hand corner and press send. Just taking the next question here, Julian. Thanks, Julian, for doing this presentation and speaking to retail investors. I decided to become a shareholder in the company after you returned to the business, as I too believed in the potential of the business too. Could you just quickly remind us about the transformation since your return, cutting SKUs, reducing inventory? And I know you have just gone through that, but perhaps just if you could expand.
Yeah. So basically, when I came back, the business model was in effect being run by people who are not from the industry, so they didn't really understand quite how successful I had been in developing a business model that worked very well within this industry. And as usual, people bring in consultants who then haven't got a clue about what's different about Superdry and why we were successful. So what happened was they tried to convert the business model to a retail model, and what that means is you're always chasing newness and you have no consistency or foundation products. So at the end of every 6-month season, they would pull all their products out and put them in a warehouse. And of course, the inventory levels just went like that. So when I arrived, I think there was something like 19 million garments within the industry. We've already cut that down by, I think it'll be about 4 million garments so far. And we've been working on about 2 million per year reduction, and that's even through the pandemic. So reduce the inventory by 2 million, you'll see those logistic costs come down. You know, the percentage of current stock obviously is going up, and the amount of discounting that's required in the business is diminishing every day. So physical stores will never have a sale again. And we've got it, like I say, another probably 2 million by the end of this year, and next year I suspect about another 1 million to go, and then we will be in a much leaner position. Then you'll see if we do any clearance, it actually is a money-making channel.
Great, thank you. Which moves quite nicely onto the next question, which is how do you see the shape of the business going forward, splitting between e-commerce, wholesale, and store, and what trends are you seeing from the consumer that really shape your strategy?
So look, wholesale's changing. Physical retail is it's about making sure that every single store that we own is profitable, and making sure that it you know, the omnichannel experience is right through those stores. But obviously the big unlocker is e-com. I mean, that, you know, will come to no surprise that how important microservices is to that level of development, and how much we intend to move more product through that channel, and how we can advance through social to communicate and get our product out there. So if you're really looking for, you know, where do we see the huge growth, it will be through e-com. Wholesale, though, is one of those sort of mixed words, if you like. So franchise is very important to us, but also I believe, I'm sure you've all understood the sort of drop ship kind of model that the Zalandos and so on, John Lewis's have introduced into their business models, where they are the platform that sells and we are the platform that fulfills. So, or the business that we fulfill. So I believe wholesale is going to move to that model too, in physical terms. So if we take department stores, where you have what we call a foundation product, which means a very stable product that doesn't change, t-shirts with embroidery, sweatshirt hoods with embroidery, those sorts of products. We intend to move it to a replen model from us. So we put the tables into department stores, populate those tables, and then replen from our stocks. That will increase the sales dramatically because you are taking out the buyer, if you like, who hasn't got often any idea of how much of a product is going to sell. So when we did this online with say Zalando, I mean, our sales went through the roof. I believe the same thing will happen with physical wholesale, because it's very difficult for a buyer to say we're going to take £100,000 off this table. So they're always cautious. Actually, if you allow the public to purchase what they want to, and you have a replen model, that can you can have many multiples of those sales. So I believe wholesale is going to move that way. And actually, when you start to look at the style choices, as we call them, the divisions of the ranges and the product areas we're now in, if we look at a department store, we could be on 3 floors quite easily. So I actually believe that wholesale will go into quite a significant growth phase over the next few years.
Great, thank you. I'm just looking at the live questions that are coming in, so I might just chop and change, because I think some of the questions that we received ahead of today's event, I think you very kindly covered off around inventory and I guess potential further collaborations to drive brand awareness. So perhaps if I could just turn to a couple of these live questions. So thank you to Imran, who asks, what is the sustainable level of profitability underlying PBT that Superdry can achieve in the medium term? Do you envisage the brand ever getting to the peak levels of profitability in 2015 and 16?
So I'll answer the second bit, yes. Sean can answer the first bit.
No, the answer to that is absolutely. What's happening at the moment is we're still learning about how the trading patterns are going to be coming out of the pandemic in all the different territories we trade in, and what those patterns will look like between physical stores and online. But ultimately, what we've been doing in the background during that time is re-engineering the business through rent reductions, payroll savings in stores to make it a much more profitable operation. So the aim being, if you couple that with the margin gains we've made through the full price trading, that we'll get our profit margins back within the next 2.5 years to where they were historically. And then with a slight lag, as we start to expand more geographically through wholesale, whatever channel we choose, we'll get our turnover back to where it was historically too. But the great news then is more of those pounds will flow through to profit on the bottom line through a much leaner operation in the business. So it will get there. It will take us a few years to get to those levels, but it will definitely get there.
That's great. And I mean, you did touch on geographic access there. And one of the questions we've seen is, could you run through your strategy to expand sales globally? What are the opportunities and issues you face with increasing Superdry's rest of the world sales, as this seems a very logical potential for growth?
Sorry, what? So geographically, so obviously the UK, you will see incremental growth. We're big here already. There is obvious growth in Germany in terms of both physical stores, e-com, and wholesale. All three channels will grow. As is the case with a lot of Europe, we're not as saturated as we are in the UK. We are the affordable brand. And what's really interesting, I've been in this, like I say, in this industry for a long time. I've never known a place where there is less competition in the market. So actually, as long as you don't, self-inflict wounds, the opportunities out there are absolutely enormous. We are the global affordable brand. Now we want to be the sustainable global affordable brand. But that is who and what we are. And there are, in that space, there used to be the Abercrombies, there used to be the Jack Wills. They've all gone. So we are kind of left in this position where the online players who were first movers tend to be making fast fashion clothes that aren't really competition. And for a good quality, in tune with the public product, there is very little competition. You know, Zara are out there, but they're brilliant at what they do, but they are non-branded. In the branded arena, there's not a lot. So we actually feel like there's a huge opportunity. America, you know, it sort of goes, okay, Britain, Europe, America. What does that look like? Well, America for us, we have a retail presence over there. Obviously, the pandemic has halted us being able to go over there and really monitor them properly. We will do. We have a huge opportunity with wholesale. I mean, absolutely enormous with department stores, especially with the model that I was just talking about with the basics. You know, historically, in my absence, that what happened was in America, they tried to turn us into a fashion brand. And actually, we're a basics brand. We're really about, this is where you come for a brilliant sweatshirt. This is where you come for a brilliant pair of chinos or a cargo short or, you know, a pair of cord flares or whatever. So, you know, you come to us for really brilliant basics, which really plays into the American hands. So, and as the sort of localized players in America are, you know, weaker than they were, or kind of not even relevant in our market anymore, it's a huge opportunity. So I see America as a vast wholesale opportunity, which then creates awareness, and then your e-com sales follow. With physical retail in America, we will be focusing on the East Coast, not the West Coast. So again, there was a few openings in the West Coast. It don't make any sense. We're very much an East Coast product, and we will be focusing geographically there. If we can find a partner who de-risks us on the store rollout thought process, i.e. a landlord partnership, then we will consider opening more stores. You know, at the moment, there are more voids than there are shops, if you know what I mean, in America. So the ability for us to fill those voids for landlords is there, but they have to take the financial risk. So that is a possibility, but I don't want to, you know, you can't put it into a model as yet.
Thanks, Julian. Thank you.
And we've got to be flexible as a business, because opportunities come to us and you kind of go, okay, actually, that's a good idea. And I hope you realize that, you know, of course, we've got a strategy, a 5-year plan, but the reality is you've got to be slightly flexible within that. And that is another difference between, you know, probably me and another, where, you know, I am open to altering slightly the business model to capitalize on a moment. And I think that's really important.
Great, thank you. Next question we've got is from Justin. So thank you, Justin, for your question. It says, hi there. Will you continue to sell your Overstock items through brands such as TK Maxx? Do you worry at all that this might damage the brand in the longer term? Certainly the perception.
So look, you know, reality is we didn't have a choice. I mean, if you come in with this 19 million garments, I wasn't going to have a big bonfire. So you know, we have to clear them. And I think we've done actually quite a pretty good job of managing our way through that process. There isn't long to go. So you know, would I have preferred never to have a sale? I hate sales. I hate discount. I mean, that's not my world. So I'm about brilliant product at the right price. So you go, I want to buy it. Not about discounting at all. So, you know, it is what it is. We have to accept it. It's part of resetting the brand. The good news is that if you are moving your products forward, then the legacy product has less relevance. So every time we move forward, that's our ability to reset the brand. And that's what we're about at the moment. We are really about understanding what those new products are going to be, how we're going to progress the business with those new silhouettes and so on. So I am far less worried than I was 2 years ago.
Great, thank you. Turning on to another question. I mean, a couple of questions, I think, along this same line. This question's from John A, who asks, could you talk about the return rate from online orders? What is the cost to the business? And also talk about perhaps the environmental impact.
Well, it's different in different geographies. So Germany is obviously the most pronounced in returns, and we will be looking to fundamentally reduce that impact as much as we humanly can. We're all conscious of the negative impact of moving products as singles around the world. So look, we will endeavour to reduce our returns rates through consolidation centres and so on, and making it not harder for people, but try not to make it so easy that it becomes the norm. Because what you don't want to do is create a market where people buy two and send one back as a normality, and that's not a healthy place to be. So, we're very conscious of it, and we will monitor and maintain a vigilant eye on trying to reduce it. In terms of the actual costs, I will pass over to my.
Well, it's mostly fulfilled by a third party, so they don't sort of disclose their costs directly attributed to this. But I think the answer is it's a very high element of our logistics costs. So there are two incentives for us to manage this effectively. The first is environmental, and Julian's absolutely right, that is high on the agenda. The second is financial. Every return requires repacking, processing, putting back, and then repicking to send out again for no benefit in terms of top line. So it's quite an inefficient operation for all retailers, and we need to address that.
What you might find, you also have to remember that our margins, as we move to a full price stance, are pretty strong in the industry. We have pretty robust margins. The people that probably are the worst affected are the fast fashion guys who haven't factored in their cost models the cost of the ever increasing cost or amount of returns. So those fast fashion low cost guys are probably in a trickier place than we are, as our margins quietly increase. But from a sustainability point of view, I'm fully with you. We need to reduce those numbers.
Great, thank you. Next question, if I may, from Simon, who asks, would you look at M&A to leverage your platform into sub-brands for the group, like we've seen with a number of online players?
So I'm very interested in bolstering our team SUPERDRY, if you like. And we will look at collabs. We will look at all sorts of ways of introducing new thought processes and potentially brands into the business. So look, there's nothing to disclose today or tomorrow, but I'm completely open to developing other areas for this business.
And we're on the radar for the guys in M&A at the moment, as someone who might well be interested in having a look, but we're also realistic about the fact that we're emerging from a pandemic. Our first priority is to be able to generate the cash to reinvest in the business as we need to drive the growth plan. But absolutely, we'd be daft not to keep our eyes open in this current retail environment.
So I'm sure you saw on the video that vintage store upstairs. So that's a very clear show of intent. So if you remember, Topshop on Oxford Circus always used to have the basement, which was always about other brands, and very often they can create a heat for the total brand, and that is a very positive thing.
Great. I think you have touched on this, but I think Carl T has just submitted a question saying, how do you try to differentiate between similar competitor style brands like Abercrombie, Hollister, etc.? And I know, you talk about the sustainability part of it, but perhaps if there's anything further you could add to that.
So I think it's really interesting. In my opinion, I don't want to disparage competitors, but they are from another country, so I'll sort of carry on. The reality is they've lost their product skills. They are trying to work out who they are rather than knowing who they are. And when I return to the business, I know who we are. I know what we are as a brand. I know why we exist. I know this industry, and I love our brand. It's a very different thing from where they are. So their founder, if you like, left the business 10 years ago. It's been in decline realistically. They've both been in decline because they're both the same company for quite a long time. But they really lost their way, in my opinion. You can all make your own judgments about where you think their products have gone, but go into any of their stores, and I think you'll find the quality and they don't really know what they are anymore. I think it's the reality.
Perfect, thank you. I think we had a couple of questions around share price, and I think at the end of the day, that's kind of what we're all here about, right? So, and I know that investor feedback will be important to you. So what I do is I'll ask you perhaps this final question to sum up with, then, and it comes from John, and there was another two, I believe. In terms of share price in the medium term, profitability, what is the company's strategy in terms of returning to shareholders? Priorities in capital growth or income to shareholders?
Look, we won't be paying a dividend for a while. I mean, that is for sure. We are about growing this company again and building it back to its full strength. And as such, I think we would be stupid to think in any other way at the moment.
Perfect.
Okay. I think there's a lot of investments that we've got that we're not able to make right now. Those would take priority, and the reality is there ought to be capital growth for investors, just based on the notes that are coming out this morning. Clearly we can't give guidance, but the 8 analysts that follow us, at least a couple of them are commenting on the valuations. So we see that as being the return in the short term. But ultimately, this business returns to being highly cash generative. So decisions we have to make on that front in the future, but we're not near that point at the moment.
That's great. Well, listen, guys, thank you ever so much. I know today, being the first day of your results and having a full scheduled roadshow to fit us in, we are deeply grateful for that. I know investor feedback's important to the company, and I'll shortly redirect investors to give you their thoughts and expectations. But I guess before doing so, Julian, could I just ask for a few closing comments, and then we'll send people on the way?
Well, look, I mean, we as a company are really excited about where we sit today. We've come through the pandemic. I think we've managed ourselves very effectively through it, and now we're really looking at the positives of what we've been quietly beavering away at, and showing you all how much work we have done and where we're going on this journey. So I'll repeat about, don't forget microservices this year coming. Product is going to continue to get better. Sustainability, we will be number one. Social, we are communicating now in an effective way that we weren't doing before, and the competition is weak. So I think we've got a real opportunity now to show you all how much work we've done, and I think this is a very exciting year finally, after peddling around this pandemic for a long time. So we're very excited, and I hope you can sort of see into what we're saying and see the future as we see it.
Brilliant. Thank you very much indeed.
Thank you.
Julian and Sean, thank you for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SUPERDRY PLC, we'd like to thank you for attending today's session, and good afternoon to you all.